have with us Feroze Azeez, who's the joint CEO of Anand Rathi Wealth, joining us. Feroze, good afternoon. So good to have you back. And since our last conversation, the Brent has tremendously cooled off. Just last week, we have seen about 10% downtick. And despite the fresh escalations over the weekend, it's largely remained stable. Do you think the market has been repricing a better situation now? Feroze, I think you're on mute. I think you're still on mute.
Sorry, Lavisha. So you would have heard me say that crude had peaked out when it was 120. I said the peak is behind us. 124 is what it went intraday, and my prediction on the crude's mean price for FY27, which is what is important from a trader's perspective, what it touched on the higher side, lower side, how much does it move is what it depends on. But from an economic standpoint, for a country standpoint, all we have to try and measure is the mean crude oil price for the fiscal year. And that I pointed to 85. When it was 100, I was saying 85. The current mean is 92. The median is 93. In my judgment, the mean and median will be close to 85, 87 for the full financial year. If that's the case, then we are, as a country, significantly better than what people would have envisaged just a couple of months back. I was trolled significantly when I said 85 is going to be the mean and median on the media, of course, social media. So I think that seems to have come true so far. Second is when I look at the 13 instances of the last 50 years, when crude rose more than 50%, in all cases other than two, it came back down. That's what I had cited the last time around as well. So this one seems like a similar case. That there is a 28, 29% drop every time crude has risen 50%, other than COVID, post-COVID recovery and GFC recovery. Every time it has come back down, and this time it's already come back sooner than I would have expected. So our balance of payments, which was a big challenge, that will do very well. Second, the kind of FCNR deposit which India is going to see with leverage, SBI has got an approval as a bank. So our rupee is going to stabilize. At 96, 97, people are speaking about 100. Again, when I was saying 92, 93 could be the mean for the year, it seemed very, very unrealistic. Now seems realistic if we are looking at about 50, 70 billion dollars in terms of FCNR very easily, because people are talking about 4-5 times leverage. 10, 12 billion dollars of actual money plus a 3-4 times leverage could mean 50, 60 billion dollars of inflow, including the leverage. Because the swap cost has been absorbed by the government. So that can bring stability to the rupee. And so you have good news on both the sides. And that implies that market is buoyant as expected.
Okay, got it. Feroze, you were pointing out on the RBI's latest reform, that's your FCNR deposits. We have seen that in the last quarter, banks did see a bit of a tepid growth in terms of overall FY26 as well. How does it make you feel, going ahead into the upcoming quarters? Are you more bullish now that RBI has announced a slew of reforms?
Yes, I think I was there at the banking conclave. In fact, Anand Rathi had organized it. When I was hearing the top bankers, I personally I'm very, very bullish from a long-term standpoint for the banking as a sector, because that becomes the backbone of the economy. So I from the perspective of where these private banks are currently available, I would say they are at maybe 1 sigma lower than their mean price to earning or price to book, however you want to measure it. When you're getting a backbone kind of a sector at a 1 sigma lower than mean valuations, I think I would capitalize on it. Why are they available at a cheaper price? Not because their businesses are not cogently or not very well placed. They are very well placed. But as it may be, you would see that the top 10 stocks, 5 of them in Nifty, are banks, and largely private sector banks other than SBI. What happens is these larger banks, which are larger weights in Nifty, and Nifty has had a large intersection with MSCI Emerging Market Index, which follows $2 trillion. If Korea, Taiwan, China does well, it eats into a lot of share of these top 5-7 banks, which are there in the top weights of emerging market index. And that's why you see a lot of outflow, which is not fundamental sale of ownership. It is more of the momentum sale, which is what index fund is. Index fund is a momentum player. He tells you that I will buy more of what does well and I'll sell more of whatever has done worse off. And that's why you see a lot of money moving out from Indian banks, unfortunately, to something like a semiconductor company. That's because they share the same index. And that follows, there's $2 trillion of money approximately which follows those indices. I see some funds which are worth almost $50-70 billion individually, which follow this index for emerging market investing.
Got it, got it. First, let's talk a bit about global markets. Then we should shift back home. KOSPI, for instance, tremendous rally this year, nearly doubled, and now since 1 week, the index has seen about 16% fall. Everyone is saying that the AI euphoria is fading. So, do you think it's true, or is this just a natural pullback given the kind of strong rally it has seen?
Unfortunately, everybody says what has happened over the last 10 days. If it does well, everybody says AI is something we are missing out. If it does 16% lower after a 200% rise, people say it's over. So point is that if you look at past performance of the last 2 weeks, of course, you will be very disappointed. But after a rally like that, what happens is there is how markets work is the first active guys will exit. Once active guys exit, then there is pressure on passive guy to exit, because if performance goes away, weight goes away. If weight goes away, the passive guy goes away. If the passive guy goes away, he further makes the stock fall. So every time a momentum rally is started or finished by an active fund manager only, because globally active fund management is lower, is why you see in the US changing the direction of a rally becomes very difficult, because 90% of the US market is passive. That means they will buy performance. So who is going to be the person who will challenge and be the contrarian? So I think that the rally getting stopped in the AI will happen more easily in the Korean and the Taiwanese market than in the US market, because there is a lot of active management. In India, only 10% is passive, all right? 90% is active. It's just the opposite in the US. So it's very difficult to break a momentum cycle in the US. So coming back to your pointed question, I wouldn't be surprised if KOSPI after 1 year would be bleeding. And people would forget that it did so well, just like they had forgotten that gold can ever correct at $5,600 when it went to the peaks in January. People forget. They have got very, very recent memories. And I'm not too perturbed by about a 16% fall, but I won't be surprised that Korea would be a written-off market in a year and a half.
Okay, that's a strong statement, Feroze. Feroze, what about, but does this mean that the AI narrative is not really faded and we can expect such kind of bounces and recovery to take place in a market like this?
Yes, AI is not equal to Korea. Korea is not equal to AI. Korea has the top two stocks with 50-60% weight or even more representing. India is more diversified as a story. Unfortunately, because of two stocks representing a large portion of the capital markets in Korea, it has become synonymous. But what is going to happen is US also understands that the kind of de-risking it needs to do, it can't have a territory very close to China making maximum of its semiconductors. So that's why you would see, if I read it right, Intel and Apple have come together to make semiconductors in the US. So will that AI expenditure become more in-house from a US standpoint? That is possible. This business is very cyclical. So will that impact not AI, but impact some of these markets who have gone astronomically high and still look very low on PE? They look, people say that it's available at 8 PE, 9 PE, but that's a cyclical revenue. Of two stocks comprising of 60-70% of the total market cap of that country. It has 15% weight in MSCI Emerging Market Index, one stock, which is equal to Brazil and India, all stocks put together. India's 170 stocks put together is 11%, and there is one stock there with 14%. So you will see that kind of astronomical rise, but if the earnings disappear, the PEs of 8 also would look expensive.
Okay. So do you expect that the FI flows can get reallocated even from Korea or even Taiwan perspective?
Yes, definitely it can get reallocated. And they're so innocent as investors, because they tell you the formula. MSCI weightages are available for one to compute. I have, as an Anand Rathi, I have a subscription to MSCI's methods of calculation. I won't be surprised if performance goes away. like it has for the last 2-3 weeks, weightages will reduce. So incremental dollar which comes in will be more allocated to India than the rest of the markets where weightages are becoming more normalized. So do I expect India to get an FII inflow? In my judgment, yes. I am so wrong that I've predicted it wrong. I almost thought February, March inflows will happen thanks to Trump, sir. That has got delayed. But I think in the next 2-3 months, you should start seeing money trickling in. And if that were to happen, larger stocks will do better than broader markets.
Okay, got it, got it. So where does this leave us with US being the developed market and having more AI related plays versus emerging markets? And of course, how does India stand amidst all of this?
India stands beautifully. It depends on what you expect of a capital market. I don't know why people would be upset in a war like this if Nifty is just 4% down from the February weekend. And why should I be upset? And if the small cap index is 8% up from the February weekend, and people are still upset that why am I not making money? The model portfolio of Anand Rathi, which has 14 funds, is up 16% as of 23rd of June from 1st of April, where Nifty has done 8%. From the lowest lows, because 30th March was the last date of the last financial year, which recorded the 52-week low closing of 22,313. So I personally think Indian market is poised very well. The pessimism is significantly non-mathematical. If one of my clients was upset saying that why is the market not doing well? I'm so much at the mercy of Trump. When I showed him a 16% return in 2 months and 22 days, 23 days, he was surprised. He was more looking at media, especially social media, and getting perturbed. So to answer your pointed question, is the Indian market currently doing well? Of course, it's doing well. Till 23rd June, my estimate is 3,786 crores has already come in small cap. Of course, this number will be reported in about 8-10 days by AMFI. You will see that the second highest money for this calendar year, this month of June, which is still to be published, but mark me on this one, will be the small cap. And mid cap has already got about 4,700. That's my estimate. And FlexiCap has got about, if I read it right, almost FlexiCap has an inflow of almost about 4,900 crores already in till 23rd. And the last week it's still counting. So 35,000 crores of inflow, even in a volatile market, is possible in all funds put together.
Okay, got it, got it. Feroze, let's come back home then, apart from the global markets that we were discussing earlier. Now that the crude spike scare is over, you expect that, you also mentioned that the $120 per barrel that we seen earlier, that has clearly bottomed out. So from now on, what will investors focus more on?
The investors should focus more on earnings. I think that's very important. The trade deal is going to be very, very crucial. Third, what kind of government actions to capitalize or to catalyze the capital markets? I would be definitely watching that, because I don't think the Indian finance ministry has done much to help the sentiment. STT increase, tax increase last year. I think all that has not resulted in any inflows. Or, of course, STT has resulted in a reasonable income, but I think that has dampened the sentiment more than the inflow, because there's a lot of disinvestment happening from the government. If you look at SBI AMC, is going to come up with an IPO. Now, of course, SBI Bank owns it, but indirectly government owns it. So if you think that increasing long-term capital gains benefited the pockets of the government, not this year or the next, because that resulted in no capital gain to book. So I think I'm watching out for some actions in terms of sentiment boosters and actual bottom line boosters from the government, from a direct capital market. Has the government done enough from an indirect standpoint in terms of promoting consumption by doing capital expenditure? It has. So to answer your question, what will I look out for? I will look out for earnings, which is just going to start in about 8-10 days. And I'm very hopeful that the earnings will give us a pleasant surprise.
Okay. In terms of growth, what are your expectations from the June quarter?
See, when you look at growth of PAT growth, I would break it down into three components. That is, of course, Nifty or NSE, Nifty top 100, which is what mutual fund guys call large cap, 150 mid cap, and then 250 small cap. I would say that the aggregate earnings growth over the last year, same quarter, should be above double digit for all these three, is the expectation. If I look at constant constituents, most people who give tippani on earnings, they forget that there is large changes in the constituents. Like last year, there were 67 changes in NSE small cap 250, but people would look at earnings without neutralizing these changes. So constant constituents earnings growth of 10% plus on all these three indices for this quarter is very likely. Look at how the weightages are placed.
Okay, got it. Got it. Any sectors that you think is worth visiting before the earnings, start and trickle in from, in just 8 to 10 days?
Yeah, I don't know from an earnings for the quarter perspective. I would definitely want to look a little inward. I would look at agriculture, manufacturing, defense, and infrastructure stocks, infrastructure-related stocks for the full financial year, then this quarter only.
Okay, got it, got it. All right, Feroze, with that, we have to let you go. But, thank you so much for connecting with us and lovely conversation like always.
Thank you, Lamisha.